Good evening, ladies and gentlemen. This is Market Recap. Butch Shorak for Options University, Friday, January 6th, 2012. Access to this webinar is for educational information and purposes only. None of the instructors or personnel at Options University are registered brokers, and as such, what we do is for educational purposes and concepts only. SPX, what did it do this week? Well, as we look at it, we're definitely in an up cycle. If we look at this area right through here, the last 4 days, it was a 4-day trading week. We can see that it has continued in this up cycle, which began around 11-12 days ago. Notice that we're within the normal trading range that we've been in since about mid-October. And we just had one big news item that shoved us out of it for a very short period of time. But this has absolutely been our trading range during the fall period. We continue to say breakout. And that's exactly what we had during our 4-day trading series this week. And the Santa Claus rally. Well, remember, just for review, it's the last 5 trading days of December and the first 2 trading days of January. So we can see that from that time, here's the first 2 trading days of January, here's the 5 days, and you see that we are definitely, the Santa Claus rally was intact, which gives us a much better outlook on the first quarter after the rally. All right. Remember, had it been a downtrend during that same time, it is almost definitive that it's the beginning of a very poor first quarter. We consolidated once we did this breakout. We broke through this level right here, and then we consolidated in a new higher level. But the air got thin up here. We were unable to rally up. Notice we got the highest high was on Monday, or it was on Tuesday, which was the first trading day of the week, and then we saw that we did not reach that high again as we had difficulty getting higher highs. We also had a bit of a pullback from the high today as the traders had to decide whether they were going to keep their positions through the weekend, and we had just a little bit of a sell-off going into the close today. Also, what happened was we saw that we actually ended down a little bit in the S&P, which is what we're looking at. So this is it. This is the SPX chart we're looking at, closed at 1277.81. Absolutely, we had a consolidation. We had contraction in the volume. We had contraction in the amount that we moved during these 4 days. Remember the rule, whenever you have contraction, after that comes expansion. The only problem is we don't know which way because we are reaching up toward resistance. Top of that yellow box there is our previous high, and that will be one of our goals to get there in the coming week. All right, we see the VIX has dropped down. We're down to around 20, so we're right on the border of what one would consider normal VIX, which basically runs somewhere between 20 and around 10. So since last August actually, we have been running a very high VIX, which means that the volatility in the market has been extremely high during this time. It's coming back down into normal ranges. Noticed in the last week, in the last 2 weeks, as the bad news has been coming out of Europe, which is one of our major areas that is providing impetus or pullbacks in the market at this point. The bad news was handled a little more gracefully, and we did not see the big jerks in the market that we had been seeing. For the week, the Dow today ended up down 55 points, but we see that for the week it was up 1.2%. The S&P was down today 3.25, but for the week it was up 1.6%. NASDAQ, where we had a split market today, in that the NASDAQ bucked the trend and was up 4 points for the day and up 2.7, being the biggest winner for the last week. So the NASDAQ kind of led us through and into this rally. All right, earnings coming up. This will be an earnings-driven market as we come into this first part of January. Monday, what many consider to be the very first beginning of earnings. It actually started last week, but there wasn't anything of note. Many consider the Alcoa announcement to be the beginning of the earnings season. That's coming up Monday. A lot of whispering going on that they are going to miss their numbers and they are going to actually report a loss, which some look at as an indication of what's coming during the regular earnings season. Not a whole lot coming out this week in earnings. After Alcoa, Friday we have J.P. Morgan, which will be the beginning of the financials reporting. And J.P. Morgan has been one to hold pretty steady, so we'll see exactly what happens and some indication of where we can expect and what we can expect the financials to do in the future earnings season. In our week ahead, will we continue to have the low volume? We had volume this low this week that was as low as minus 55% of the average volume for the last 20 days. Volume actually has been pretty pathetic since August. We did not have big volume coming through the fall like we've had many years. The institutional buyers are not putting their money in the market. They're not making any commitment until they get some kind of direction as to what's going to happen with the Eurozone. And is the Eurozone a mess? The European sovereign debt, we hear, is just a real problem. Is there going to be more downgrades? Are there going to be more headaches? Unemployment in the Eurozone stayed at record high in November as the impact of the sovereign debt crisis rumbled on. The jobless rates in the 17 nations that use the euro was 10.3% in November for the second month in a row. If you think that's bad, go to Spain. Spain's rate was at 22.9%, which was the highest of the different countries that are involved in the Eurozone, and 4 times as high as in Austria, which is in more northern Europe, where the rate was only about 4%. So Southern Europe is causing problems, and that's exactly where the problems are coming from as far as the European crisis. Earnings will be moving the market as we go into the next week. Economic indicators that we have next week, not much on Monday, not much on Tuesday, not much on Wednesday. Nothing there to really move the market or to cause big news as far as economic indicators. Thursday, we have jobless claims and retail sales before the market opens. On Thursday, around 10 o'clock, we also have business inventories. Friday, some things that sometimes can influence the market. We have international trade and consumer sentiment, which will be occurring on Friday morning. So there are not a whole lot of economic indicators. If the market's going to be moved, it's going to be moved by Euro news and be moved by earnings. Alcoa starting it out on Monday. All right. So that's the week ahead. That's the week in the past that we just saw. We definitely continued the Santa rally, which was looks good for all of you bulls out there. And we had a number of stocks that we looked at last week. And for those of you that are gold members, we will continue on and take a look at the stocks that we talked about last week and see what they did during the first 4 trading days of January. So with that, in just a couple of minutes, I'll be back. All right, stocks to watch. On our list, we have Apple, MasterCard, McDonald's, Nike, WW Grainger, and WYNN. Let's go ahead and take some look at some charts and see exactly what these stocks did during the week. First one we're going to look at is Apple. We see that as we were going into the end of the week, we were having a little bit of a pullback on Apple. And our expectations were that Apple has an excellent chance of running into its earnings, which are coming up in a couple of Mondays in January. I think around January 19th, 17th, something like that. Well, with that in mind, let's take a look. Can you say a breakout? Apple broke out, and we see that it went up exponentially. Part of the news that moved that was there is talk of a union of some kind between Apple and Target. So that certainly has fueled this move in Apple. And as you can see, we're approaching resistance, but we're also approaching earnings. And we could end up with an all-new high in Apple. Apple, an interesting company that basically, at this point, it's kind of a pathetic commentary on the debt debate, which is coming up in Congress. But currently, Apple's cash reserve is more than the U.S. government's. Because unless they move up the debt ceiling, the total operating balance for the U.S. government is at $73.8 billion. And Apple's cash reserve, according to its spreadsheets, is at $76.2 billion. So Apple has on hand more cash to run its company than the United States has to run its company. Of course, we're just going to end up changing the debt ceiling again, and that in itself can cause a fiasco, as we saw the last time that took place, and watch the Senate and the House of Representatives arguing with each other. The last time around, that did have some impact on the market. So that's coming up here very shortly. With that, let's take a look at Apple, and we see that we had a breakout. If you were bullish on Apple, you're in good shape. MasterCard, can you say breakdown? What happened with MasterCard? It just hit the skids. It is now in a new trend from an uptrending, standard uptrending stock where we had the 200, the 50, and the 30-day moving average, and it was going smoothly above those. We ended up with what one might call a double top, but we absolutely ended up with a failure. And at this point right here, we ended up with a stock that was going the opposite direction. So if you were bullish on MasterCard, it was time to change your position because you could no longer tolerate it because the trend had ended. So MasterCard is now in a downward trend. Not much news to signify why that happened, but this is what companies do. They run till they stop, and then they basically retreat. And then they retreat until they will run again. Some never run again, but I'm sure we will see MasterCard run again. McDonald's. We saw that it was on an uptrend. Last 4 days we had a bit of a pullback, but it headed on up, closed at over $100 again, as it basically is consolidated for the week. If you're bullish on this trade, you're still in good shape. You didn't have a change in trend. It's still trending exactly the same way. So McDonald's looking good for all you bulls out there as we see it run into its earnings also. All right, Nike. We saw that it was consolidating at this $97 area, and if we look at the last 4 days, continued to consolidate, ended up with higher highs as we were going forward. For those of you that believe in positive theta and believe in theta being on your side, this trade has been good to you, and you've had a good week. Even though the market didn't go much of any place, positive theta, time has been on your side. Another good move for the week by Nike. All right, we also talked about WW Grainger, which was new into the stocks we were looking at, and we see that we were having a bit of a pullback on WW Grainger, and we were looking for it to pull back to the moving average and potentially bounce. It didn't even make it to the moving average, and we see that it has bounced and is headed back up. We are again in an upcycle, and if you are, again, one that is taking advantage of positive theta with your spread trades or whatever particular trade you're using, then we're in good shape because it didn't go much of any place, but time is on our side. The last stock that we're going to take a look at is WYNN. We talked about WYNN as a stock that was a downtrending stock, a stock that had hit some resistance areas as we looked at it right here, and we said that what we wanted to watch for was this stock to roll over. and we talked about basically doing some kind of a trade, maybe a credit spread, a call credit spread up in this area to take advantage of this rollover. And we see that that's exactly what happened, and today was the big payoff on that, as we saw WYNN go down. And basically what we're talking about is we're a little bit of a scare on Tuesday as it popped up, but it continued with its downward trend, and basically you could have been out of this trade this week and pulled out all of your profit that you needed to close it anywhere at a nickel or a dime. So a profitable trade, again, taking advantage of theta and having some influence on our trades, basically by the direction when we're talking about our spreads. So that's the stocks that we had to watch. It was the week that was. And as we look forward, what can we expect? Well, we've broken above this line, which we said was a resistance line. We were above it all week long. Now the question is, where can we go? Well, we've still got more room to the upside. One of the things we look at is market forecast, and we see that until it gets above this 80% line right here, we have room for it to go higher. So the red line could go higher, the blue line could go higher, and we see the green line, which is the longest term line of all of our lines, says that we are already overbought, but that green line can stay there for months. What we're interested in is where are the blue line and the red line. The red line being able to move from the top to the bottom in 1 or 2 days. And we see that it's got room to move up. So we could go up. Our next attack is going to be at 1292.66 would be our next point of resistance, which would be that point right there. All right, we closed at 1277. We got a little resistance at 1280. And then after that, our next point of resistance is 1295.92 on our way to 1300. And at that point, if we hit 1300, one might think, unless we have one heck of a lot of momentum going on, air could get a little thin up there and we would have problems moving higher as we hit that level. All right, that's a breakout to the upside. To the downside, where is our support? And we're at 1277. As we come down, we see this line right here provides us some support. First line of support is at 1274. Next line of support is at 1269.37. If we come down through here, could we come all the way down there? We could. Could we come down to this diagonal, hit there, and bounce? Well, we could. Could we come down to the moving average and bounce? Yes, we could do all of those things. What will be moving us? Like we said, earnings and Europe. Those are the two things that are going to be influencing the market as next week the ticker turns. So for Options University, this is Butch Shorak. Thank you.